Spectrum Extra on Radio 1 FM 90. An extra hour of analysis and discussion of the topical issues of the week. Brought to you by Housing Finance Bank, a financial institution regulated by Bank of Uganda. Housing Finance Bank, we make it easy.
Your views, our interviews on Spectrum, Radio 1 FM 90.
A very good evening to you. It's a Friday, 12th of April 2024, and this is Spectrum Extra, 2 hours of analysis of the top events of the week. But today we'll be looking at the outcry over taxation and the available options for this country. Well, there's an ongoing disagreement between the Uganda Revenue Authority and the traders under Kampala Capital City Traders Association, KACITA, which has prompted a deep discussion about taxation in Uganda, where some people are raising a number of issues, concerns largely. Very many people, including the traders, have claimed that URA is unfair, but URA has maintained that it's implementing the law. Now, for long there have been complaints about a section of Ugandans allegedly being overtaxed, while another section is said to be not paying tax. They even enjoy tax holidays. Now, there are concerns that the government is failing to expand the tax base, which has resulted into a few people being targeted with different types of taxes. Now, as we prepare for the next financial year budget, there have been calls that the government should cut down on unnecessary expenditure to ensure that the available resources are properly utilized. Now, if we collect few taxes, or if we pay few taxes and they are poorly utilized, it's likely to result into more borrowing, which would again affect the available national resource envelope for development purposes, given the huge requirements that we have to service the already existing loans. And already this financial year, we're seeing a proposal for new taxes. The Minister of Finance wants to see 500 shillings imposed on every kilogram of cement, adhesives, grout, white cement, or lime. And people are saying this is likely to increase the cost of actual construction in the country. And already we know we have a problem when it comes to fewer houses, decent accommodation for many Ugandans. They're also planning to increase 10% or 75 shillings on a liter of water, which is also a problem. Some people are saying this is going to be a problem. That is, mineral water, bottled water is likely to become more expensive. They are proposing to increase on petrol. They are going to impose an extra 100 shillings on a liter of petrol. Kerosene, they are going to impose their 500 shillings, and a number of many more taxes, including tax on land transactions. And people have been saying this is too much, but the government says it intends to generate 1.9 trillion shillings from these proposed taxes to finance the 58.3 trillion national budget for the next financial year, 2024-2025. So what are our options as a country, given the fact people are already complaining about overtaxation and lack of good services? What can we do? That's a discussion we'll be having this evening with a panel of 4. The guests: Mr. David Walakira, he's the Executive Director at the Center for Budget and Tax Policy. Good evening, Mr. Walakira, and thank you very much for joining us.
Good evening.
Also in studio, Mr. Ibrahim Bossa Chivuka, Assistant Commissioner, Public and Corporate Affairs, commonly referred to as a spokesperson at the Uganda Revenue Authority. Good evening, sir. Thank you very much for joining us.
A very good evening, and nice to be part of this distinguished panel.
Also in studio, Mr. John Kafuko. He's a lawyer and programs manager at Youth for Tax Justice, who are the members of the Tax Justice Alliance. Good evening, and thank you very much for joining us.
Good evening, and I'm very glad to be here.
In studio, Ms. Perry Aritura, regular on this panel. She's the Executive Director at the Women Democracy Network, Uganda chapter. She's a lawyer and a pundit on governance and human rights matters. Good evening. Thank you very much once again for being with us here, Ms. Perry Aritua.
Thank you, Kenneth. Good evening, listeners and my fellow panelists.
Right, I'll begin with you, Mr. Ibrahim Bossa. There is an ongoing disagreement between you and the traders. We hear there is likely to be a strike, close down of shops on the 16th. There was an attempt to do the same. Of course, a section of traders actually did it this particular week. What is the issue that has pushed you two partners to this level of disagreement?
Thank you very much, Kenneth, and to our listeners. There are a couple of issues that the trade and the trade community has put forward regarding the way they work and the way they are treated and the issue of taxes, largely. I think the number one on their list is to do with the electronic fiscal receipting and invoicing solution that we have rolled out to supervise the collection of VAT as a tax. Of course, they do make mention of issues of double taxation as they feel. Of course, there are issues also to do with some import duties that have been of a concern, and basically many issues of high prices of taxes. You realize that many of their issues, there's also one to do, of course, with some foreigners who have been licensed as investors, and they're dominating the value chain. They're distributing, they're retailing, and they have gone all the way down to Kui River, as it is now called. So some of the issues, of course, are of a policy nature, and there have been a couple of discussions in the past, and some have been taken up. But those that are of a tax administration nature, especially the value-added tax. And the background is that Uganda rolled out the VAT tax 1996, and it has been going, but largely it was basically being accounted for manually. We are coming from a regime where our traders or our businesses, of course, given a self-assessment regime, they have to assess themselves and declare taxes. And VAT can be a complex tax, if you may see it, because usually it has three categories. It has standard rated products, it has exempted products, and also zero rated products. If you do not have a good bookkeeping system, or you do not have accountants to help you, actually you can't be able to get it wrong. And why? Because VAT is calculated and collected at different stages of the value chain, and the last person who pays actually the tax is the consumer. So just to give an illustration, is that if I was a manufacturer of, say, sugar, I will get cane, produce sugar, so that is the value I've added, and I will be able to put 18% on the product that gets out of my factory going to a distributor. The distributor will purchase this from me and will also sell it on. But when they procure it from me as a manufacturer, in there is their input VAT. Whatever price they have purchased has a VAT component, and as also a distributor, when I'm selling, I will also put a VAT component on the sale. Now that becomes my output VAT. So usually what the distributor will collect as VAT will be the output VAT minus the input VAT, and that is what gives you a position either to be able to remit to URA or to claim, because if you have more input, less output, you find yourself in a negative position and you'll claim credit on VAT. So that happens for every other stage. Even the wholesaler will have an input and output VAT. If there's another stage like a retailer who is VAT registered, also the same will happen. So at the end of the day, the last consumer pays the VAT, but there will be different remittances that will be made by the different players. Now, that calculation can be very tricky. So what the world has done, of course, is to digitize, to have technology come around. And in East Africa, there's a transaction technology that has been used. Many of the countries like Rwanda, Kenya, and Tanzania started using this way back 2007. So we've been the last one to onboard the technology to monitor VAT. So this technology is the electronic fiscal receipting and invoicing. Now, one, our traders, basically we have found two issues. There is an issue of technology adoption that is part of the issue, and that is probably natural, it is given. That is something you have to monitor, give time, handhold, create sensitization and education. But we also have an issue of mindset change. We are coming from a situation where our fathers used to have two books for the business. You have a book that you show the taxman, and you have the book that you keep close to your chest that actually has your real numbers. What these solutions come to do is to create unprecedented and unparalleled transparency. In terms of the IFRIS, what things it can do when it's being used in a business, it will collect your transaction data if you are purchasing. It will has a stock management option. It will do sales management for you. It will help you to generate reports, even to be able to file a return. So it is efficient in a way that as a business owner, you have a 360 view of your business, and ideally it can help you now to be accurate. You only give the tax you need. Because we now use pre-filled forms as some of the new technologies we use on our portal, if you go to your account, insert your TIN and get your form when you're filling a return, all your transaction data that you've had through the month is already pre-filled in a form. You only have to validate or add what's missing and you submit, meaning that you can file on time and accurately. So it is good for business per se. However, even we as the tax administrator, that solution is so helpful for us. Some of the things we have been able to do with it in as much as it is supervising VAT is, one, we can tell who is evading tax if you're a VAT registered person. We can tell who is suppressing sales. We can tell who is dealing in invoice trading. We will tell who is dealing in VAT fraud. So these are things we have been able actually to see using this technology. Now the business knows this. Just to give you as an illustration, we have done a 6-month survey on some VAT registered companies. We have a couple of supermarkets we have surveyed for 6 months, and in 6 months we're able to identify that we're losing about 7 billion in VAT.
7 billion.
7 billion. We surveyed the packaging manufacturers, and we realized that in that same period we're losing 4 billion in VAT. And there were some other two categories of people. Guys who are dealing in software installation, we're losing at about 181 million in VAT. So those are things we're able to see because there's a system, there's data that you can analyze. So imagine those who are supposed to be VAT registered and are not using any system. It will be difficult for you to know what is going on. So when this system was being rolled out, it was launched in 2019, but the actual implementation started in 2021 because of the COVID. And we have been basically training, educating, and trying to onboard taxpayers. We started with the large ones like manufacturers, government institutions. We came down to medium enterprises like supermarkets, like hardware sellers, and so on. And now we needed to complete the food chain, the value chain, to people who are doing wholesaling, retailing, like in Chikubo.
All right.
The key here is the only people who are required to use the electronic physical receipting and invoicing are those who are VAT registered. And who is a VAT registered person? The law requires that if you have an annual gross turnover of 150 million Uganda shillings and above, or if you are grossing 37.5 million Uganda shillings in 3 consecutive months, then you have to be registered on VAT. On the register today, we have about 56,000 VAT taxpayers who are registered for that, therefore who are supposed to be using IFRIS. Why these numbers are important, not everybody is expected to use IFRIS. And if you see the ongoing impasse, you have people who are selling tires, who are selling shoes, who are selling bananas, and they're also riotous. And you do not know why, because this thing is not part of them.
We'll be coming back to you. Let's hear from an economist and also somebody who also follows closely issues of tax. Mr. David Walakila, what's your take about this impasse? We've got the explanation from the taxman, what exactly could be the issue, and now that we understand clearly what is happening, what's your take on it?
Thank you so much. And how I hope that when we are having this very good explanation, the only flaw with it is that the assumption is that you're dealing with the perfect market. The marketplace as we know it has several imperfections, and one of those that is really aching the trader is possibly not related to URA, the traders, especially in the malls and the buildings, have often had an issue around how do they deal with the imperfection of those that are actually trading but don't have trading licenses. These are traders in the corridors, on their doors. So what this does is, if someone falls within the bandwidth of being VAT registered, and for a reason or not, or 2 or even 10, has not been either remitting or actually charging it, because of a price competition, it is a tough market down there. Now, well, the realization comes either through education or by force that they actually qualify, you know. And how do you know that they qualify? With the high level of falsification of documentation, as you might be aware, that is quite something else. So this particular trader is going to think through the operating environment, looks at the people that are right in front of him or her, those that are trading on the door sides that they don't have control over. When the URA scouts go into the market, these particular people will vanish. So then the assumption is all this stock is for you who is in the shop. This trader is going to be constrained to want to add the VAT charge. Why? They're going to be priced out. Because the ones in the corridors are now and on the doors, some have actually possibly illicit acquired the stock that they are selling. So they are selling to have things done.
Cheaper price.
So for me, I see the need to first of all organize the marketplace. The Market Act of 2023 was just passed by Parliament last year, and I was a bit disappointed in it. It only focused on the those that are dealing in mostly agricultural produce, really. We have a marketplace that is quite big, and that is in the malls and in downtown. This kind of scenario perpetuates what we often like to call, unfortunately, informality. Informality is in these cases intentional. People do not want to formalize for those many or few reasons. But also the other perspective is then who cleans it up? To the extent that KCCA, who is in charge of that particular area, does not come through with the solution on guidance on how the marketplace is organized in that sense of the mall. Do you need to have someone with stores in the corridor? Do they have a trading license or not? If they don't, it is in the interest of the trader that is now being either brought to realize or is actually being smoked out to either start adding VAT on their goods and services, that then you will begin to see that they are going to have an organized place. There's a basic issue, really. For example, that of access of washrooms in that same exact marketplace. These particular traders pay for practically everything. Besides paying the rent in the building in which they are, they also have to pay 100 or 200 shillings to access a basic right, like a sanitation facility. Now, this person is inherently annoyed, and possibly they can't even trace the actual source of their anger. Then here comes the taxman. You man, I think you VAT worthy. The man is going to burst out. For me, I see a need for us to want to actually clean the trade environment. You cannot administer tax in the existence of chaos. Tax administration, however good the system is going to come out, if is not aligned along with better regulation and governance of the marketplace. And now for me, I think it is now time for us possibly to look at this very brand new baby, the Market Act of 2023, for it to consider the other marketplace, which now is actually being the center of the discussion. The issues in there for me will not get resolved until some of those touch yet actual realities get addressed, unfortunately not by URA. But then you will continue to see a mixture of both the moral hazard of those that are fully registered, but actually just evading and avoiding those numbers that have been pointed, the 7 billion, the 4 billion, and all those. Those exist. And then you have this other side, which is just utter disorganization that is going to make the administration next to impossible. But within those ones, there are also those that they know, according to their books, they qualify, and they take advantage of the disorganization, and the undercover pass also there, and the taxman will not see them. Now, if you do not clean or sweep, usually, even if you're staying in your own living environment, you'll often lose a few things here and there. But when you begin to organize and put things in place where they're easily visible to you, you'll begin to actually be able to identify who is actually supposed to be paying VAT and who is not. The basic is that when the trader begins to actually, if they choose to allow to use IFRS, well, do they have a choice? Most likely not. They're going to have to work with IFRS. But the practice in the market also has a failure around traders allowing to get receipts of less in terms of cost on rent that is less than what they've actually incurred. Now, IFRS will show your gross income. Time for filing, your costs are going to be undercut by the value on your receipt. Your receipt has 400,000 shillings, but you've actually paid 1.5 million shillings. Who is going to be in trouble with in terms of the taxes I was to pay? You, the trader. So the possible other value for the trader is this could be a market correction, auto correction, where you see the trader now refusing, possibly after understanding the implication of allowing a receipt of a lesser value as a rent cost incurred.
All right.
Because
now,
it is going to hit your actual tax worthiness.
Let me get this clear from you. Are you suggesting that implementation of this IFRS is likely to put the trader in a situation where they are operating under losses?
If the market doesn't autocorrect, if the trader does not come to the realization that it's no longer in their interest to connive with the landlord to perpetuate illicit transactions like that have highlighted, then they're actually going to have to, and possibly it is going to happen organically or by some kind of natural force. Otherwise, indeed, they are going to be charged a higher tax than they should pay, because the system will look at your income, the
expenditure,
the electronic fiscal devices have helped you with that. Now, the expenditure side that you're in control over is supposed to be evidenced by receipts. Your receipts for rent have 400,000 shillings, but you actually paid 1.5. Who do you blame for that?
All right, Spectrum Extra on Radio 1 FM 90. Let's go for a break now. When we return, we'll hear from John Kafuko and also Ms. Perry too, as we continue looking at this hullabaloo and outcry about taxation. The biggest point here also to look at is whether our economy in this current form actually favors the businessman or the taxpayer to actually meet the obligations. Now, stay tuned to Radio 1 FM 90. We'll also look at that issue going forward. We'll continue shortly after these messages.
Spectrum Extra, Fridays 7 to 9 p.m. on Radio 1 FM 90. Spectrum Extra, Fridays 7 to 9 p.m. on Radio 1 FM 90.
Thank you so much for staying with us on Spectrum Extra live on Radio 1 FM 90. We are looking at the outcry over taxation and available options for this country. My guest this evening, Mr. Walakira David, Executive Director at the Center for Budget and Tax Policy. We have Mr. Ibrahim Bosa, Chivoka, Assistant Commissioner, Public and Corporate Affairs, Uganda Revenue Authority, Ms. Perry Aritua, Executive Director, Women Democracy Network, and Mr. John Kafuko, Lawyer and Programs Manager at Youth for Tax Justice, members of the Tax Justice Alliance. Let's come to you, Mr. Kafuko. Your analysis of this situation and the continued outcry. People out there saying, there are people who are overtaxed, there are those who do not pay their fair tax, and therefore a small section of people continue meeting the burden. And the Kasita traders actually saying the bulk of our taxes actually come from the Central Business District, where they pay their fair share of the tax.
Thank you very much, and thank you to all our listeners for tuning in today. Now, my opinion, of course, I'm here on behalf of the Alliance and
the Tax Justice Alliance,
Tax Justice and Youth for Tax Justice Network. So I'll try to submit from those perspectives. Now, for me, the implementation of IFRS, and I'll borrow from what David was saying. I mean, the realities, what is in the economy. I mean, in terms of implementing IFRS, for some of you who studied probably about taxation, they used to tell us that you administer taxes, but you have to bear in mind the convenience on the taxpayer. How convenient is it to taxpayer to comply? And here we are talking about IFRS. How convenient is IFRS on the taxpayer to comply? We've been talking about, for example, I had highlighted on the issue of the e-receipt yang. Like when you make a sale, you have to issue a receipt. And of course, you are there and then expects the trader to remit the VAT. But we all know that sometimes in practice, some people are not paid immediately. You can make a sale and then you are paid probably after 2 or 3 months. But remember, you have to remit the VAT by the 15th of the following month. So, and I would like to push it back to our guest here. I mean, how convenient is this IFRIS system? We're also talking about yes. I think let me leave it that. How convenient is it on the taxpayer in terms of complying? But then also talking about the burden, seeing that especially that it's the traders in Kampala who are bearing the biggest burden. We've always been advocating for issues of trying to widen the tax base, trying to make sure that everyone is able to pay their fair share of taxes. And which brings me to the point is, can we look out for people who are not paying? Because all this comes that, we're having budget constraints already. You've read about some new taxes which are coming in. They're increasing taxes on fuel, they're increasing taxes on land transactions and all that. And that just means that taxes are even going to go higher in the next financial year. So can we zero down to the people who are not paying? I was reading the Auditor General's report for the last financial year, and he highlighted that over 1 trillion is being given out in tax incentives. 1 trillion. And even went ahead and made analysis and said that most of these people who are receiving these tax incentives, they're not benefiting the economy, because, especially the companies, because they're supposed to employ more people, but they're not doing that. So we are losing 1 trillion.
When you say tax incentives, those are tax holidays. People not being excused from paying tax.
Yes, people being excused from tax, and it's done in 3 ways. There is a minister. The minister can exempt. There are also exemptions in the tax laws, that is the income tax and all those, and the VAT, which are the exempt, and
also in the investment code.
Exactly. So there are those incentives which are being given out, but they're not serving the purpose. Recently, we also had the conversation of Bujagali in Parliament, which had been smuggled into the bills. They want to bring it back as well. So we are losing a lot of money, and then of course, since we are losing, and for those of us who understand this, and a tax incentive is an expenditure. It can be an incentive on the beneficiary, but on the side of this tax has to be paid in one way or another. That's why we see that URA is really clamping down. The Ministry of Finance, they're introducing as many taxes as possible, but we are losing a lot of money in you talk about that 1 trillion. There are so many sectors you could talk about, very many different sectors which are not earning that money in the budget allocation. So for me, I feel that we have to widen the tax base and ensure that we have as many people as possible paying taxes, and that way we shall relieve that burden from the traders who are complaining.
All right, let's hear from you, Ms. Perry. Your take on this issue.
Yeah, thank you, Kenneth. I think it's the issue is actually bigger than URA. And for me, the key question is what encourages a citizen to pay tax. Because one, it's a constitutional duty that we have to pay tax so that we can get services. But there are bigger issues that affect whether a citizen pays tax or not. When you look at service delivery, that's one of the key issues, because the citizen feels shortchanged if he or she is paying tax and then they don't get the service. I was in West Nile this week, and part of the conversation was actually in how do we encourage citizens to be part and parcel of development. And we had very interesting examples of citizens contributing to the smoothening roads, to dealing with the common issues that affect them, because they saw their leaders were accountable. The leaders would get money and pin it up on these notice boards. This is what we received, and this is how it's going to be used. That level of transparency encourages the taxpayer to pay money to this country, because without the taxes, we can't have services. I also want to agree with my colleagues that we have to widen the tax base. The number of Ugandans don't actually pay tax. Now, for me, the question is, how do we do that when you have a big population which is either underemployed or unemployed? Many of them resort to the informal sector to earn a living. So those are things we need to deal with. And for me, my question for especially Parliament and the executive introduces these bills and then Parliament passes these laws. Just the context, because Ugandans are going through a very hard time. No, so how do we ensure that the tax doesn't make them run away instead of, coming back and saying, okay, what is fair? Because the tax should be fair. And I think URA is suffering the consequences of limited awareness, because there are people who don't actually know that this system benefits them. The commissioner mentioned that the tax system would help the business person to know, like
accuracy, and also file on time.
Exactly. So, do those benefits outweigh the disadvantages? Those are conversations that need to be had. But otherwise, for me, it's a bigger issue.
We also heard from Walakira here, who actually said, if this system is implemented, the taxpayer is actually going to pay much more than even what they are getting from their business.
Exactly, but then you see the burden will not only go on the person who is selling, it goes back to the consumer. Because if at every level they're adding tax, then that Ugandan, the ordinary person who benefits from those services will have to pay more. But the key question is how we use our taxes. Once taxes, and Uganda, and it's interesting that there are actually countries in Africa which pay much more tax than Uganda. The question is, why are we more resistant to adopting this system? It's because of the outcomes. If I go to a health center and I don't find drugs, I use a road and my car is practically in the garage every time because the road is not worthy.
And from time to time you hear billions have been stolen.
Exactly. So there are bigger issues than this. URA is just one of it's suffering the consequences of a bigger issue, and for me the issue is governance. How do we use the limited resources we have to do the right thing? And that's why I said in those communities where we were, where they're doing everything they can with the limited resources, the community is really committed, saying we know how much money is collected, we know how it's used. So if you ask us to contribute, we will contribute because we see what is being done with the little that we have. So for me, the challenge is not really on URA. The challenge is for the people who govern this country, that as Parliament, when you're passing these laws, your oversight role, are you playing it? If yes, how is it contributing to improving service delivery? How is it contributing to encouraging the ordinary Ugandan to want to join the tax base? Because as long as you continue taxing this narrow, you're having a narrow tax base, people are going to complain. They'll be pushed to the wall. So how do you widen the tax base but ensure that whatever is collected is used appropriately and effectively to improve services in this country?
Ibrahim, on the issue of widening the tax base, you had the complaints, even it's reflected here on the table, that very few people are paying taxes. For instance, somebody is paying pay as you earn. When they go downtown to buy something, they are now going to have the burden of paying for the VAT that is going to be passed on to them by the trader. Everywhere you go, taxes. You buy from you buy from supermarkets. You're paying taxes. People are complaining. How do you widen the tax base? One time I heard you actually, URA saying you are coming up with a national taxpayers register and that you intended to expand it. But we don't see any move in that area.
Ken, I think there's been substantial movement in growing the tax base. It is key to actually growing revenue mobilization in the country, which is true. It is important maybe to state that in spite of the efforts, our revenue mobilization is still below par. We are currently only collecting about 14% of our GDP. If it is compared to the sub-Saharan average of 16%, you realize that we're still low, and actually the African average is 18%. So we are still collecting very little money. However, we have just added 2 percentage points in the last 4 years. So that signifies progress. I am shocked to see how much effort goes into just raise 1 percentage point. In terms of the register expansion, at the beginning of 2020, we had about 1.5 million taxpayers on the tax register. So as we speak today, we have 4,300,000 and a little figures that fall in there. So there has been growth in the register tax register. However, we have also come to learn that growth in the tax register does not automatically culminate into more revenue collected, because we have learned that even when somebody gets on the tax register, they need time to be onboarded, to be handheld, for them to be productive. So you'll find that on the tax register, we may have about 1 million people who are inactive. Not that they're not making money, but for some reason, they have not yet paid their first share of tax. Now, remember that we are looking at a country where statistically we are told from UBOS statistics that we have about 10 million Ugandans who have an income generating activity or employment. Somebody who has some form of income. So those people at least should be paying tax. So where we are right now, we have only gotten to the 4 million mark. We set a target that by 2025, we should be able to have 5 million taxpayers on the register. I think we are on track on that line, but I think we also need to be doing a lot of more work in terms of getting taxpayers productive. In terms of taxpayers, we are dealing with about 3 types of taxpayers. You have a taxpayer who is non-compliant and actually does not pay tax, whether they don't want, whether they do not know, but will just not pay tax, even if they know that they have to pay tax. We have those who are on and off. They will be compliant sometimes, but also maybe default in other times. And then we have those that comply. So there is a bit of work. We have a program called the Tax Register Expansion Program that we work together with URSB, because URSB registers businesses. If a business is registered, ideally they should have a TIN so they will get on the tax register. We work with the Kampala Capital City Authority because they give licenses and those permits. I mean, if a business is getting a trading license, ideally they should have a TIN and should get on the tax register. We also work with the local government, also who do the same function in areas where KCC is not working. So there's progress in that area, but still a lot of work to be done. I would like to respond to the issue of convenience in complying, especially in using these transaction technologies like IFRIS. Interestingly, there was a real issue when IFRIS had just been opened, where people supplying government and these kind of institutions would actually have to borrow money to pay for VAT simply because the person supplied is taking 6 months to pay. Luckily enough, that cry was heard. An amendment was brought up. So currently in the law, there is a provision for cash. We call it, I think, cash accounting. So in cash accounting, you apply for a cash accounting whereby you only pay VAT when you are paid. If you supply government, if they take 6 months before they pay you, that is how long it will take you to declare that VAT. And so far it has released that kind of pressure for people to be able to look for money. Some people used to take loans to do that. So I think that was a good initiative. So in terms of convenience, at least that is not a problem as we speak today. If you look at the issues that were raised there, which I liked, in terms of tax incentives and tax exemptions, it is nice that we differentiate the two. Tax incentives are already in the law, and I think tax incentives should not be a problem because everybody who is a taxpayer in business can take advantage of them. It is just up to you to know if it is something within the income tax, whether it is in the VAT Act. These are open. Whether you're a foreigner, whether you're local, tax incentives cut across. But tax exemptions, that is where the challenge is, and even the traders complain. How is it that some foreigners are able to get exempted, and while we, the locals, are not getting the same exemption?
And you're doing the same business.
Thank you very much. It could be. It could be. So that is a good question, and as I am aware to date, the Parliament of Uganda got interested in that very question. A study was instituted where we are participating as URA to study. I think there's a baseline. I don't know if it is 5 years, or if I can remember, to see how tax exemptions have performed. Usually tax exemptions are given for a reason. Either somebody is coming to invest in your country, is going to put up infrastructure, he may have to improve sections of the road that lead there, he will bring electricity to the area, he will be causing employment, and this kind of thing. So exemptions are given because there are certain benefits that come with it. But the parliamentarians were asking, have we really gotten those benefits? I have seen at least the preliminary report and they were showing that yes, there are some companies that have gotten exemptions and have actually some of the top remitters of pay as you earn, which is okay. But that's not the bigger picture. So it is a good and genuine concern because as URA, we have also earmarked it that for us to be able to improve our revenue mobilization, for example, come next year, we need to be able to rationalize and repackage tax expenditure. So we are working with the Ministry of Finance in that area.
Mr. Walakila, on the issue of expanding the tax base, how would you advise URA to do it? Some people have been saying they should get out there and register taxpayers, regardless of whether they are registered with URSB or not, so that they can be able to collect, because the majority of people are not paying taxes are actually in the informal sector, but they do make profits.
I think for me, I would want to think that this is not a URA issue. It's a notch or two higher than URA, and why I say that is that when you allow, because the biggest undoing of tax administration is the terminology informal. That is the best way how rich people hide themselves into that angle. And then I think there is a political move. Then they get usually to mobilize even those that are not affected or you shouldn't be concerned into some kind of strife and civic action. So for me, I would fair and square refuse informality, and that is very simple to do. In my view, from where I sit, I possibly don't know why the government of Uganda, I think it was 2021-2022 again, had put in the budget to procure electronic fiscal devices for traders. They are property of the Republic of the government of Uganda. For that reason, that device is not yours; it is property of the Republic of Uganda, and you're not allowed to tamper with it. And now I've heard that traders are being asked to buy their own, meaning that it is my property and possibly could tweak and deal with it as I don't know what happened, but for me that's the first step. You digitize if you want to fight informality. Recently, URA ran an advert of I don't know how many human beings have we have an inherent gap of the moral hazard. And partly when you go into the market right now, traders will tell you that the URA field officers, when they come here, they will tell me, I see here you have 1.5, you give me 600,000 shillings and then I go away. These things haven't gone away. But then for me, I would wonder why someone would actually invest now in hiring more human beings who have that inherent risk. So
you have baptized corruption with another word, moral hazard.
It is it is the sexy way of saying it. So for me, informality, I wouldn't want it around me. And definitely, so far for the effort that the Republic of Uganda has done to try and fight it, the one-stop centers, where you find your RSB, whoever you want to be, that would really have to get resolved. Next bit, I would really want to see a harmonization of databases between URA and KCCA as the major trading areas. I know there are other municipal councils and cities, and I'm putting cities in quote for purpose of the listeners, because many of them do not qualify to be that kind of naming. That harmonization is critical to fight informality.
All right.
Because here is the thing. You want to expand the tax base, but you are allowing the tax base to be hidden. I was using this very simple, basic issue. If I'm a border rider, and on average in a day, I make 25,000 shillings. And of course, even the listeners know this is not true. They make a notch higher or two. We multiply this by how many days? Many of them work for more than 25 days. How much money are we talking about? We are talking about a basic figure, 25,000 times 25. This is 625,000 shillings. This is direct income earned. How many border riders pay direct income tax?
Currently,
they are paying on fuel.
They are struggling.
You see, don't bring that they are paying on fuel. You who drives the car, you pay the tax on fuel. Is your income here if you earn more than the threshold for income tax forgiven because you're paying on fuel?
So this is what tax distribution? Or
no, what
are you looking at?
This is a gap.
They're supposed to be paying 20,000 a year.
20,000 a year
income
as advance income.
Yes.
Are they paying?
That's the
But you
problem.
see,
they're not paying. That's the problem.
But you're supposed to enforce.
Thank you very much. I can tell you about what we are doing there, but it's a challenge. That's what I'm saying. Those are some of the leakages we have to deal
So
with.
for me, and that is what we call informality. But this is perpetuated by the governance structure. You recall the so infamous words from our dear leader around the issue of taxing border people.
What did he say?
Leave my people. Now and then you are here. Be us in the back.
All right.
Collect money.
Let's hear from Mr. Kafuko.
It's sometimes the
We are
government.
looking at widening the tax base, and one of the things you're looking at is to and the culture of exemptions. How do we do it? What do you want what do you want us to do as a Tax Justice Alliance on that particular issue of exemptions?
First of all, we have to come up with a policy to guide how these exemptions are awarded. I know some of them are in the law, and he said they are open to everyone.
Those are incentives. There's a difference between incentives and exemptions.
Those are actually exemptions, because usually exemptions
are given by the minister, but incentives are already in the law. If an incentive is in the law, even we as administrators just implement it.
It's the other way around.
And
but
you defined it. You said actually there are situations where the minister can come and make a pronouncement and say these people.
I was actually quoting it from the Auditor General's report, because the Auditor General generalized it. He just called them incentives. He said there are those which are in the law, the exemptions, under like the Income Tax Act, Section 21, and then of course those in the VAT and all that stuff. Then there are those which are awarded by the minister. Of course, I don't know what they base on to award those. But usually, anyway, I don't know, whatever the definition is.
You believe there is a loss there being incurred?
Yes. First of all, okay, let us look at the ones in the law. You look at the thresholds, they are very high. It's especially if, for me, I will speak for maybe small and medium enterprises. He said that they are accessible to everyone, but I disagree, because the thresholds are very, very high. I think it's about 10,000 USD or even more than that.
Maybe not accessible, available.
Yes, probably that. So, first of all, and the traders we are hearing about in Chikubu would also benefit from such exemptions. I mean, they would love to benefit from them, because in any case, they are supposed to be the engine of the growth of our economy. So I feel that, first of all, we should come up with a framework. I mean, a framework to guide the awarding of the incentives, but also look at these ones in the law and try to make them as affordable, if I should use that word, to the normal Ugandan, the normal Ugandan businessman, because most of them are really out of this world. So you can't even though you want to, you cannot benefit from them, So I feel that, first of all, coming up with that framework which guides on especially the incentives, because of the minister. We don't know what the minister bases on. We've also heard of the president. I think the president also has an initiative where I think it's called a round table for investors or something. People go there and lobby, and then of course they get all sorts of incentives or exemptions, and so those are, and I think those are also linkages. If we can have a policy, a framework paper, or even put it in the law, how what is supposed to guide the minister or even the president whenever they want to give out these incentives, so that we know that if you're giving someone an incentive or an exemption, you know how the economy is going to benefit. You know how the normal person is going to benefit. But also, as I said, making them as accessible as possible, affordably, to young people, even the people in Chikubu, the normal person. We would all love to go and invest in, for example, in Namamvi, that industrial park, and do business there and benefit from all the free stuff in there. But unfortunately, we cannot, other than being in downtown, probably.
Perry, on the issue of exemptions, I'm reading from a parliamentary website here. On January 10th, 2023, the Commissioner General of Uganda Revenue Authority, John Musinguzi, was in Parliament, and he actually said they were set to lose 2.8 trillion shillings in tax exemptions. Actually, URA had made an analysis and probably thought that some of these tax exemptions are not necessary. What's your take on this issue of the tax exemption?
I think the question is, when they do the analysis, do the decision makers listen? Because if they are saying this is what we will lose, and the decision maker goes ahead and still, gives those exemptions, and then they expect URA to meet certain thresholds in terms of taxation, then that's where the problem is. And I think it's important to have more, the politicians listen more to the technocrats. Because at times the politicians make decisions politically, not technically. And that's why my question actually to the Commissioner would be, the other countries have implemented efforts. Why has their implementation been more successful? Because some of the economies, Uganda's economy is of course not doing as well, but there's a similarity. So what is the difference? but on productivity, because I wanted to speak to productivity.
Very quickly, before we go for break.
Just two things. You know, some of these issues are more structural, because at times when we raise the issues of women getting more into the productive sector, people say, you're talking about women issues, but they are taxpayers. You know, so if you don't address the gender issues that keep women away from the public sector, exactly, but many are in the informal sector. That's the thing. So if you don't address those deeper issues, the issues of human capital, the issues of population control, we have a big population which depends on the few taxpayers. So for me, the issues are not just, taxation, but
Right, Spectrum Extra on Radio 1 FM 90. We're going to go for a break. When we return, we will link up this discussion on the national budget. We know URA is supposed to raise a certain threshold of that budget funds required to finance the 2024-2025 national budget. What we have in there, we'll be hearing, and whether that budget will be able to perform, taking into account some of the taxes that actually have been proposed. Stay tuned to Radio 1 FM 90. We'll continue after this break.
Spectrum Extra, Fridays 7 to 9 p.m. on Radio 1 FM 90. Spectrum Extra, Fridays 7 to 9 p.m. on Radio 1 FM 90.
Spectrum Extra on Radio 1 FM 90. Our topic of discussion today is the outcry over taxation and the available options for this country. My guest this evening, Ibrahim Bosa Kivuka, Assistant Commissioner, Public and Corporate Affairs, Uganda Revenue Authority. Mr. David Walakira, Executive Director at the Center for Budget and Tax Policy. Ms. Peria Ritua, Executive Director, Women Democracy Network, Uganda Chapter. And Mr. John Kafoko, Lawyer and Programs Manager at Youth for Tax Justice, who are the members of the Tax Justice Alliance. Well, we have comments already coming in on our WhatsApp line, and I will encourage you to actually send in more. I'll read out some of these comments, then the panelists will respond to them. Grace Inseta, why does this government find it hard to cut fund abuse? The Civil Service Standing Orders commands the parking of government vehicles after working hours and prohibits officers driving government cars. As the opposition showed, this would save lots of money if enforced. If such variable abuse can't be curbed, how about the abuse hidden in offices? It's terrible to increase taxes to fund such abuse. A listener here, a taxpayer, complaining about money being wasted, and then they have it tough to actually pay taxes. We have a comment from Kasozi Mulindwa. The URA spokesperson evades the fact that traders, as key stakeholders, were not involved, did not participate in the development of IFRIS. This makes IFRIS a URA top-down imposed tool without ownership from the small traders who are the expected users. Well, we have another comment coming in from Fred. Spectrum Extra, 5+ years ago, I traveled by road to Tanzania, Matema, Lake Malawi. In Tanzania, e-receipt was the in thing for every transaction. Fuel, restaurant, etc. Even remote areas, and there was no animosity. URA should understudy the Tanzanians. That's a comment from Fred there. Drani writes in and says, URA runs after every poor people looking for survival in town, leaving wealthy rich people who have stolen taxpayer money tax-free. They buy square miles of land and keep thousands of cattle. They sell milk, beef, and live animals, tax-free, just free. God help Ugandans. Well, this is not the first time people are complaining about taxing the agriculture sector. We have had that particular issue on this very table here. Luanga Habat writes in from Matuga. Much as URA has the obligation to collect taxes, the taxpayers have the right and obligation to demand for accountability periodically. Can URA and similar government bodies know how much they have that much as they have the obligation to carry out their duties, the citizens have the right to demand for accountability from them, bearing in mind that both parties are partners, not competitors in development. My sister is talking. Personally, I have any reason convincing me and reminding me to pay taxes. A whole chunk of money goes to salaries of civil servants, of which I don't see their work. Samuel Intinda, applauding you there, Perry, with your comment on taxpayers and not seeing the value of the taxes they pay. Isaac in Kampala, we made supplies to one of the government corporations in August 2022. Since then, we have not been paid for those supplies. However, URA issued an urgency notice on our bank accounts because we had not remitted the VAT and our outlet was closed by URA up to date. How would that tax guy explain that? Well, we have another comment from Triagenda. I think we may be confusing tax base. For me, when the economy has not evolved improved qualitatively or quantitatively, yet we collect more tax doesn't mean widen tax base. We are just being efficient in tax collecting or over-exploitation of the taxpayer, which is not good. We need to expand the economy. Those are some of the comments that are coming in. Very quickly, I'll give you an opportunity, Ibrahim, to respond, and also the panelists will make comments before we move on to our next segment of discussion.
Thank you very much. To start with, Madam Perry's concern of how other countries were able to roll out IFRIS, it's true the other countries are doing well.
Not only Perry, there's somebody even who told you to understudy Tanzania.
True, and I think also that's the point. In Tanzania, I think got a golden moment. The traders actually were rioters just like ours. In Magufuli's days, he called them, sat them down, and told them that the future of revenue mobilization is electronic transactions. Full stop. What we can discuss is how can we help you to acquire, on board, but this business of whether to use it or not to use it was not an issue.
Here, Yoweri Museveni was about to meet the traders, but I hear the meeting has been postponed. Or was it scrapped? I don't know.
No, I think that was a misinformation of some sorts, but he's yet to set a date. That is what the reliable information is. Within this month, he will do. So you find that there was leadership from the top political leadership in Tanzania, and that's why for us here it's a little different, because the traders will...
Not only leadership, emphatic leadership.
Excellent. Here, our traders will go and talk to anybody who wills to listen. They will go to the leader of opposition, they will go to Afande Nakalema, they want to talk to the president. Anybody who wants to listen about this. So we need a firm stand for people to know that actually the future of revenue mobilization is digitization. And we only have to find ways, how can we sensitize, how can we handhold, how can we educate to make sure that this happens. Rwanda is the same case. In Rwanda, which is interesting, there is even something going on WhatsApp. In Rwanda, if you are a customer, you go into a supermarket and you actually buy something and you walk out with your receipt, and the taxman finds you and says, could I have a look at your receipt? And your receipt is not physicalized. You are penalized first as a customer for having not demanded an e-receipt, and also the issuer is also penalized. That is how tough things are going in that direction. But on our part, I think, given who we are, there is a lot of engagement that is required. There's a lot of advocacy that is required, and we need to be able to help people onboard technology and also change their mindsets. If you look at issues of the gentleman who said that they were agents for not paying VAT, that's a critical thing. For you to use the cash accounting basis for VAT, you have to apply for it. So you have to make a request to the Commissioner General, and that request usually you have to use it for 2 years. You just don't apply it today, then not the other day. So it is based on application. So if you have not applied for it, the assumption is that you're okay. You have cash flows that can always meet this, and you expect it to pay. So I think that was the missing link in that regard. Involving traders in the development of IFRIS, that is an interesting one. The way IFRIS came down, we did not bring it blanketly to everybody. We started with the big guys, with the medium guys. We're now coming with the low guys. But to give you an illustration, last year in November, the Commissioner General of the Uganda Revenue Authority, Mr. John Musinguzi, was in Chikubo. And the Chikubo people presented 2 issues on IFRIS. One, it's expensive for them because we asked them to buy EFDs, electronic devices. But the devices cost about 1 million shillings. So they said it's too expensive. He promised, we'll get you a solution that is cost effective. They said, 2, we have not been educated on IFRIS. He said, we will educate you. Between that time, we have developed a desktop app that you can put on a standalone computer or a tablet for IFRIS. We have developed a mobile app that you can put on your smartphone. And if you can use mobile money, you can actually use IFRIS. All you need is a digital printer there, a small one, and you can issue e-receipts. In that time, until last month, we have done 80 workshops in Chikubo alone, basically on this IFRIS. We have visited 110 malls, going actually door to door. On our register, people who have accepted to sign that they have received support from us are over 15,000. They allowed us to put a tax hub in the middle of Chikubo for 10 days straight. And on the registry, we have 335 traders who
Why
visited.
did you move the tax hub? You should have kept it there.
No, it was in the middle. It was an obstruction.
Well, there are
but
so many
because of the
buildings
camp,
around Chikubo
Yeah.
where URA can actually rent.
it was in the middle.
and have a permanent
Since you
presence
mentioned
there.
that, the last meeting we had with the Private Sector Foundation at a press conference, the Commissioner General, together with Private Sector Foundation, agreed that we're going to set up a business facilitation center, not to collect tax. We have Boulevard where tax is collected, but this is a center where a tax person can go to be handheld, to be assisted, to ask a question, to complain, to see that we can support you in complying, in adopting the technology, but also being able to onboard your ability to fulfill your obligations.
You should actually
And that
put
will be
there
done.
a payment desk so that people are not forced to move from that side to Boulevard.
Actually, payments, we have
Why
we,
don't
we,
you,
we
have
have softened
that
things.
option there?
Today, URA doesn't allow cash. Every payment for taxes can be done digitally. You can do it using mobile money, using your EFT, bank transfers, and ABCD. But even the border guys we're talking about, we have a USSD code, *285 hash. You can pay your advance income tax, your rental income tax. You can pay your park user fees. All many taxes can be done. So we have softened that bit. We don't use cash because we also want to put the distance between cash and our people, but also shorten the customer journey.
Are you done with the responses? Any other issue?
I think that is those were, I thought, critical that needed to be responded to.
Let's hear from Mr. Walakira. Response to some of the issues put across by the listener.
I think for me, one that came through is let us grow the economy. The growth of the economy is not only a function of government expenditure, which is the G in the income model. Yeah, for those of you, the listeners that were in that class, there is the issue of consumption that has to facilitate growth of the economy. The trader's strength is in my ability to buy what they are selling. The trader is as weak as the poorest of us. So for me, the poverty numbers of Uganda are about 21.4% of us now, taking the $1.9. If you use the $2.5, about 45% of us. If you go multidimensional poverty, around 15% are poor. That is a discussion that does affect the growth question. The issue of inflation, the issue of price of these particular goods, now that the traders are going to have to VAT what they've not been VATing. If it turns out that the prices are that prohibitive, there's usually a lag between when something is done and when the economy responds. From the numbers that we've seen about the so-called rebasing of Uganda's economy, it is growing. Rebasing basically means that areas that were prior not included as in the computation of the output of Uganda are added, and that is why even when URA will in nominal terms increase the value of the amount of money that they collect, once the denominator increases, then they get stuck at 13.something%. So it's not that they're really not trying, but that actually in actual number, in terms of output, the economy is growing. So the question is, who is driving this growth? Okay, if we're not capturing the output of some of the colleagues that are in the area that is now hot cake about IFRIS, who is driving the growth? So then the growth drivers are in sometimes not inclusive of many subsectors. So you have your services, your services pushing quite a bit of growth. You have your manufacturing pushing quite a bit of growth. And no wonder one of the candidates for a tax increment is cement. And the key among the key principles of putting a tax is on an item that is price inelastic, whose demand will not drop because you put. There has been unfortunate evidence. We really cannot explain the growth of Uganda's bubble in the construction subsector, because the other areas don't seem to show. This I know for me, my income hasn't grown that much.
Well, we actually told them most of the funds invested in the real estate are stolen proceeds.
We were told if we're investing it in the country, that's not an issue. So for me, the last bit on how this economy is bound to grow is paying attention to the investment question is a critical bit. And investment is the function of source of capital. The question of do you have the money to, for example, meet your tax obligations when you have to, is critical. So the cost of money in Uganda is critical. Now the investment climate, where many of the Ugandans, sad, I'm going to sound like government spokesperson. They will say they don't feel the government expenditure, but the investment climate is a function of your road, your electricity, your security, infamously, as we like to say in the circle. These are some of the realities that will create the investment climate, and sometimes, unfortunately, they include the rest to the bottom in the so-called incentives. You look around the region, who's charging the most, then you want to undercut them by a bit. You're driving yourself to the pit of the bottom, because then you're compromising your ability to actually correct. And indeed, the exemption frameworks. In the PFM Act, there's a requirement that when I think that is annually, when the annual budget is being presented, the executive, as represented by the Minister of Finance, is supposed to present along with the draft budget a list of those that are going to benefit from the tax exemptions. And indeed, the framework for these exemptions is actually drawn. It exists in the Ministry of Finance, and I actually quickly put down a note here. It has to empower institutions to do their jobs. The institutions, for wherever they cannot do what they're supposed to do, no amount of frameworks are going to save us. Ultimately, these things have to be implemented, colleagues.
Let's hear from Perry. So it's response to some of the issues that have been put across. Somebody actually applauding you for your statement on, and there's also another person who talked about the need for URA and the government officials to understand that taxpayers pay the tax, they must also demand for accountability.
Which is true, because it's constitutional. If you look at the national directives and principles of state policy, which are in the beginning part of our constitution, it's actually incumbent on the taxpayer to demand for accountability. And they do that through different ways. At times it's through their representatives, but even as individuals, part of how they demand for accountability can be through, because they pay tax, they have to demand, but also through election. If you have an MP who is really not voicing your concern, you can also demand for accountability by choosing another one. But Walaki raised some things, who is driving the growth. And for me, the other side to it is who is benefiting from the growth. Because if I see myself benefiting from the growth, and that the URA comes and says you need to pay taxes, I will be more compelled to pay that tax because I am benefiting from the taxes that have been collected. So it's and you see, that's why the conversation cannot only be URA. We need to look at the different players that enable or disempower URA from doing its work.
Mr. Kafuko.
Yes, I think for me what stood out for me is the issue of cutting down on public expenditure. I think it is very critical. I mean, boosting the tax morale goes hand in hand with that. You do not expect me to be happy paying taxes when I'm hearing someone is getting 4,000 per day, and I don't know whether that is taxed, because I understand that the MPs also exempted themselves from exempted their allowances from tax. So I'm assuming it's not taxed. Then you hear they call it a token of appreciation. I don't know whether that is also taxed. Is it a bonus, a service award? And then you're hearing all sorts of things, and then you expect.
The law actually says if you get a gift of a certain value, you should have it declared.
Maybe he could tell us. He should tell us because for as far
benefits
as I remember,
are taxed.
Yes, maybe he could tell us whether the honorable was taxed, because he is on record refusing to return the award. So I don't know whether you got your I don't know whether it's 30% or whatever. I don't know, but. I mean, it is demoralizing for a taxpayer after hearing all that. I mean, I'm down there in Chikuva, I'm hustling, business is bad, the economy is bad, taxes are high, and then all of a sudden I hear you hear someone is getting all that money just because I don't know, they sat on a committee somewhere and they agreed that we deserve this. And so I think that the issue of public expenditure is very, very important, especially if we are going to grow our revenue capacity. So I feel that is outstanding.
All right, we have other comments coming in very quickly. Anthony Rice, good evening, Spectrum Extra. I wonder why those businessmen who are worth 150 million are not participating on that protest, because those are the people who accepted the 18% VAT at the first place. That is affecting the common traders today. Yiga Samuel Mary Namlondo Zone in Boyogere says, thank you for the program. My concern is about rampant exemptions done to the so-called investors and some government officials, yet forcing those with small businesses to pay instead for them. And another thing is failure to depict what the taxes do. That is a very big problem and misuse of the taxes. Otherwise, more sensitization is needed to make Ugandans aware of why they are paying taxes. Kenneth, thank you for the panelists. Now, first, Mr. Bosa should know it from me. A big percentage of IFRIS enforcers do not know the IFRIS work. They have penalized me because I had written a pro forma quotation. Secondly, they should allow non-registered VAT agents to freely sell to VAT-registered agents so that URA will be able to see who hits the threshold. Practically, they will widen the tax base. They should also create presumptive VAT to whoever does trade. Then that's a comment from Henry from Chiwenda. Then we have another comment. Good evening, Kenneth. The problem with IFRIS to the small taxpayer is the need to integrate your business with the URA system, where you have to pay a minimum of 5 million and quarterly subscriptions of 200,000. Mr. Bosa, how many small taxpayers can manage to pay this? That's a comment from John in Chanja. Another comment, URA and the Minister of Finance are sleeping on the job. By now, electronic receipting system should be rolled to kiosk in my neighborhood, but all that has been done is to heap taxes on the employed few. Minister and URA must wake up. That's a comment from Henry. Another one, good evening, Kenneth and the panelists. My name is Wilson Vikakanga in Muyenga. URA is getting it wrong to rely on USB to know businesses that should pay taxes. Let them employ resources, visit the businesses world in a friendly approach and know how many businesses that are operational. Sit down and calculate the lowest that people will pay willingly and collectively meet your targets. Exemptions do come in as a way of evading taxes because the tax rates are high. URA needs to collect little from a wider spectrum to make a big turnover than too high a rate from a narrow tax base with the lowest turnover by employing high cost of administration. People fear going to industrialization for estate business because of fear of tax administration. Then we have another comment here. URA does its best, but we have political expenditures which the traders feel tax collected is not consumable to services provided. We are losing annual tax from border who have even taken over pedestrian walkways to shopping places. Imagine how much we could have if the annual 20K per 200 borders is paid. I pray KCCA can also organize the city. It's a mess. So traders can feel comfortable. That's Rogers in PG. So many comments still coming. Exemptions are more corruption than anything. It's a tool against local investors because even local investors create jobs, support social services, etc., but no exemptions. From late Murwana days, government has been urged to focus attention on local investors, give capacity to those investors who grow rice in Luera, grow sugarcane, maize mills, packaging, etc. We have another comment from Sharif. Why can't URA provide those devices for free to the traders? That's a comment from Sharif there. Then we have another comment. Tax compliance by citizens is necessary evil, but the pain felt by taxpayers should be reflected in the output. Another comment, the solution is to expand the country's tax base by devising means of other sources of income like tourism. However, the biggest challenge is the priorities that are upside down and greed beyond understandable limits. I try my best to control my anger towards our political leaders, but it is terrible. I fail to find the right word to describe them. That's a comment there from David. Now, let's move on a bit and try to connect, unless there's somebody who wants to comment on anything.
Yes.
Mr. Bosa?
Yes, I think I will. There's very good comments there for the noting and taking. But for purposes of why VAT registered taxpayers are not rioting, is because there's been some bit of misinformation, of course, and a bit of propaganda, which definitely propaganda catches the people even who are least concerned about this. The people who are usually having a turnover of 150 million and above, for us, those are the big boys. They actually know the law, they know the requirement, they know their obligations, so they may have no reason to actually be riotous, but even when they have a problem, they know the avenues where engagement can happen and things get done. So maybe that's what we see that. Allowing non-registered agents, VAT registered agents, selling to registered agents. There's no law that bars that, but the system is the one that self-checks. If I'm VAT registered, I may not allow a supplier who is not VAT registered because I need an e-invoice to claim my credit.
Yeah.
If I get supplies from somebody who is not VAT registered, I can't claim for credit. So the system self-checks. So that is basically why that happens. But it's not that somebody has been bad. Some of them may allow, but that means they are foregoing their credit in that regard. The system-to-system integration that has been mentioned is only for the big boys again. The big companies, because they already have existing accounting softwares that manage their businesses, they don't need to have an IFRS solution. All they need is to have their softwares speaking to the URA system, and that integration is what they call the system-to-system integration, and it costs a bit of money. That's why it was left for those kind of guys. For these others, you can actually use an EFD device, you can use a desktop application, you can use a mobile app. Mobile app is free. You download from the Google Store or Apple Store, same as also the desktop. The device, if you can afford $1 million shillings, it's okay. I like the person who says why this can't be given free. I'm also wondering why we can't give them free, because we donated 400 devices to Chikubo when we're, getting them enticed into using them. Unfortunately, they even didn't use the 400. But I think it would be a good idea if government could rethink providing these devices, just like I think also David mentioned, so that it's the property of the Republic of Uganda and somebody is issuing it. It would be a brilliant idea in that regard. Informality, why we deal with people like the URSB, KCCA, yes, it has, that tripartite was an arrangement which we thought has also brought some good kind of feedback, but I think also the comments made by the people where we need to be more proactive to maybe actually visit businesses on a door-to-door and have a discussion and see what somebody's doing and see what their threshold is, I think could be a plausible thing. So the other one is basically just an approach, and which we think has also served its time. We can always be creative in that regard. Thank you.
All right, we have another comment here coming in from Wafula, who actually writes in and says, why is it possible for taxpayers in Rwanda, Tanzania and other countries to comply with taxes and not in Uganda? Who wants to take that?
John will try.
John, why do you think it's easy for people in those countries to actually comply than here in Uganda? What could be happening?
As John is coming in, we need to understand that taxation is never voluntary, and ultimately the tax bodies have to be empowered by the powers that be, the political leadership. And we've just highlighted Tanzania. They had the windfall of a fantastic political leader who did not take a complaint for an issue. He asked you to trust him in the direction that he gave you, then talk to him about how he can help you, not to come and argue with him not to do it.
But he was also proactive on service delivery.
Now that is what I'm trying to say, that it is a what? It's a governance question.
Yeah.
It's not really about asking whether or not I really want to know.
Yeah.
I should not be put in a position where I decide whether I feel like paying taxes. It's not the feelings affair really. It's an affair, and wherever you see government dilly-dallying on enforcing tax payment, just know on the expenditure side they're doing something which they don't want you to see.
If I can borrow from the PSST and Secretary to the Treasury, he says that taxes are not quid pro quo. It is a mandatory transfer.
Well, it shouldn't be that. We have a social contract.
That's what
we
we
pay taxes, and we expect you to give us something.
Legally, you do not have a choice. The law requires you, if you have an income, there's a certain percentage of your income that you should give so that it can benefit many others who may not even have it. But of course, under the discussion of a democracy, we can sustain that kind of rationale.
Well, maybe
I feel like it's a matter of 2 feet bad, 4 feet.
Maybe to add, of course, the obvious thing is when you look at, for example, Rwanda, the service delivery is a bit of better than here. But I cannot entirely agree with the listener, because at least I've seen in Kenya, if you remember from last financial year, there was a lot of...
the listener was categorical, Rwanda and Tanzania.
Oh, Rwanda and... sorry. Then Kenya doesn't come in. But I think, for Rwanda, at least I've been there, you see the services are good. But then for Tanzania, I've also been there. And for me, I think it's also more of a culture. They've cultivated a culture where you have compliance. I mean, from way back, which is missing here. You know, you in Tanzania, you can even meet people driving as low as 50 kilometer per hour on a very good road. For example, if I can give, for example, a road like the bypass.
And here in Uganda, they will be
here. You will never see that.
All right, let's go for a break.
There's that culture there.
All right.
Cultivated among the people.
All right, let's go for a break. When we return, we'll look at the 2024-2025 national budget and whether it will actually work for us, boost the economy in order for us actually to get more taxes. Stay tuned. Radio 1 FM 90 will continue after this break.
Spectrum Extra, Fridays 7 to 9 p.m. on Radio 1 FM 90. Spectrum Extra, Fridays 7 to 9 p.m. on Radio 1 FM 90.
Well, thank you very much for staying with us. This is Spectrum Extra on Radio 1 FM 90. My name is Kenneth Lukagandason, your host. We are reviewing the major events of the week with a specific focus on the impasse that has come up between traders and URA, but also we are looking at a general discussion about compliance for tax and also the challenges that Ugandans keep putting across and the complaints when issues of taxation come to light. Now, let's shift our gears and connect this discussion to the next budget. We have a budget which was tabled in Parliament, 58.3 trillion shillings, which is an increment from what we had this particular financial year. And there are taxes that have been proposed to actually raise funding. The government says it will raise 1.9 trillion shillings from those taxes. But we also expect to get some external funding in terms of borrowing. And of course, we know the problem there. When it comes to borrowing, our debt will also be stretched a little bit, which will also affect the amount of money that is at our disposal to be able to meet other obligations in the area of service delivery. Let me begin with you, Mr. Walakila. When you look at this budget, 58.3 trillion shillings, will it work for us, or there are already issues that you think need to be taken into account?
I think for me, when I get the opportunity, my starting point is always that we do not have 58 point anything trillion shillings to spend. And it is important for the listeners to contextualize that what is this money. The 58 trillion shillings that actually the Corregenda now has, about 60 trillion shillings, is a figure that has a set of items in there. The key item that we are seeing in there is the item around that deals with the debt itself, the components of debt, including interest payment, which is currently around 7 or 8 trillion shillings. Then we have the domestic debt refinancing. This figure has been shot up to about now 12 trillion shillings. And what is this 12 trillion? It is a domestic debt that government is acknowledging that they owe the domestic market, but cannot pay back, and they roll it over onto the next financial year, paying off of the interest. So you have close to 20 trillion shillings in that figure that is called the non-cash is what is not available, the 12 trillion. Then you add on the actual money for paying interest, both external and domestic, and the amortization, the principal loan paid back, coming to about 22 trillion shillings. So the figure of that we are given in our budgets inherently are supposed to tell the listener or the Ugandan about the level of, in a way, of acquiring money from the domestic market, which is quite irresponsible. It should signal that. But unfortunately, every time we get these numbers, and the budget increases from 52 to 58, and people are just something unhappy. The amount of money available to spend that is going to impact you and I in terms of service delivery comes then from how many sources? The GOU expenses, that is the tax and a bit of our own budget support, and then the balance is often borrowed through project financing. When you adjust the project financing could hit about 9 trillion shillings. So you have about how much? 32 or so trillion shillings that we expect government of Uganda to actually collect. Now to spend on their own. URA over here is taxed to collect around 29 trillion shillings, and there goes when you adjust the money for Bank of Uganda recapitalization, domestic errors repayment of about 200 billion shillings. The money is finished. Now, what has happened in the core agenda that has just been placed in Parliament is that the government of Uganda has begun to move the strides of fiscal consolidation. In other words, constrained tightening. It is akin to good practice in public finance management that has a net impact of sometimes reducing government expenditure. And this we have seen close to 2.7 trillion shillings is expected to shrink out of the budget for 2024-25. And the MDAs that have been affected have been listed, the highest of about 500 billion shillings being UNRA. Now, what does this communicate to you? For me, who is expecting improvement in service delivery, in a way, it excites me. Why? Because I see unobserved restraint in government expenditure, and then a choice, or at least by words, to focus the expenditure on the high impact areas. Because we said the growth function, and we have an ambition to tenfold our growth, to a $500 million economy by a given period. The growth function is not only about government expenditure. There's we said the active demand that you and I should have to be able to purchase. There's a question of the investment. There's a question of the impact of the external market. Now, when the government side comes through and they say, okay, we have seen advice, and it has been spoken even in the budget strategy for this financial year, that government plans on reducing domestic borrowing. But when you look at the fiscal framework, we are actually programmed to pick out about 4 trillion shillings. And then from the domestic market. This is through the bonds, most especially the government is supposed to use. This becomes close to lip service, because then what you're seeing in the active real economy, where the traders are playing and fighting with URA whether or not increases the tax or not, it's actually not. These guys are going to tell you, now where am I going to get money to pay advance VAT if I can go to the rate for borrowing in the domestic market right now? We are braggant about it being around 18%. I would want to actually,
and the central bank rate has also been increased.
I would want to actually know, because I personally tried to borrow some money. I've never got a rate which is below 28%. So many of the numbers that we are being told about here are adjusted. They are weighted averages. It is a term of writing statistics. But the rate that a bank will lend you, walk into any commercial bank right now as we speak, you walk out with the best rate at about 25. And they are telling you because 25%. But when the policy documents are being read, the rhetoric is the money in Uganda is what? Cheap. So for me, the 58 trillion shillings is just possibly a number that communicates the resource envelope, but the amount of money that I am possibly wanting to pay attention for domestic and external money put together is not more than 36 trillion shillings to spend, with the realization that we are walking a fiscal consolidation journey. And it's twofold. As government is tightening the belt a bit, that should speak that you want to see it add more money. So when I see the tax bills and I'm seeing rates on certain items that are priced inelastic going up, it paints a picture that should make sense. Because I will be the same one that will come back and say, government don't borrow. So I shouldn't be the same one who should say, government do not collect more tax. The question is, how should tax be collected? But on the principle of whether or not a higher tax rate on any item should be bad, it should be good. Because you want to ensure that the other side, government spends responsibly, but to the extent that it does not borrow unnecessarily.
Perry, one of the major things we are seeing around when you look at the documents, the fact that government is trying to stop what some people call unnecessary expenditure. I was looking at one report which actually suggests that by doing that, government is going actually going to save around 300 billion shillings. Mr. Walakila has said, it's time for tightening the belt.
I mean, that's a good thing. I mean, if you save, it's just like an individual. When you save and invest, you then use that money to grow. So it's a good thing if they actually do it. Because if you look at previous reports by the Auditor General, the reports clearly state how much we lose to corruption and these other things. So if there is a way to control the leakages, to control, things that take away money from delivering to Ugandans in terms of services, it's a good thing. But for the budget, I would have hoped that, I don't know how much is being put into sectors that spur productivity. For instance, tourism, agric, sectors, because most Ugandans are in these sectors. how much money is being put there, so that at the end of the day, government is able to gain more from the ordinary citizen. That's my interest. The others are the business as usual. Most of it will go to the wage bill. I don't know how much is going to actual service delivery, because for some of us who work with the citizens, who meet the citizens often, their cry is about how can we get better schools? How can our children be able to sit comfortably in a classroom instead of being 400 in P1, with one teacher shouting her lungs off, and then we expect to grow human capital? It can't work. So for me, it's long-term projections. What are we investing in things that will eventually make us reach middle income status? Education, health, Greek, the things that have spurred development for certain countries.
I'm actually told the World Bank is likely to announce that we're in the middle income in July as we start the new. There was already a report that suggested that we are in lower middle, but we are almost there. Mr. Kafuko, your thoughts on the budget?
Yeah, for me, the budget, it kind of worries me, right from the bills. We're looking at the bills and
the tax bills.
The tax bills, yes. You're saying that we want to. There are proposals to increase taxes on fuel, and of course that's. I think that's. I mean, fuel already it's already expensive from the time of that crisis we had, where I think it was the Russia-Ukraine war or something.
And it's still on.
It is still on, but now there's that increment which is coming in. That means the prices are going to go high, and that means also the prices of other products, services are also going to go high. So, and that means the inflation is also going to go high. So for me, it is worrying. And besides that, the fact that we do not have, of course, the figures have been increased. It is 58 trillion now, but it could even go to 60. We don't know. There could even be supplementary budgets. I think it happened last year. Usually there are supplementary budgets, so it could even go as far as 65. But we have the money to finance that. And I can borrow from the last financial year. I was reading the Auditor General's report, and there was a supplementary budget which was passed just immediately after the budget reading. And he noted that supplementary, in as much as it was passed, there was no revenue to finance. There's no money to finance it, and that made it difficult for other sectors. There were some other sectors which had been allocated money, but they never got that money at the end of the day because there's a supplementary, and of course the supplementary was for classified expenditure. I think it was something to do with security, and of course it takes precedence over other sectors, other social service sectors, or even the sectors where you can, which are keen on manufacturing, which he was talking about. So for me, it is a bit of a worry to me, because we really have to tighten our belts. I know we do not want to borrow, but we are going to borrow. I think the last time I checked, they had projected that we are going to have to borrow about 32 trillion. But of course, depending on the final figure we get, it could even be more. And the domestic financing, which David was talking about, it is also very worrying to us, especially the business people, because I mean, you are supposed to be borrowing from the domestic sources, and you're competing with government. So what does that mean for people in business, the people in Chikubo who are rioting and striking? I mean, it's just going to kill them, So for me, I feel that it's tough. It's really tough. The only ray of hope which had come in, which had been discussed earlier, and I don't know why it has taken so long, is the rationalization of to try to cut down. But even with this budget coming in, you are not seeing it reflecting. I don't know whether it's going to.
Those very entities are still provided for.
Exactly. They're still being allocated funds. So you just see that. And the surprising thing is that from the Auditor General's report still, he said that I think they had allocated about 7 billion for that rationalization process, because the process started in 2021. That's when cabinet gave it a go ahead. And he said that over 5 billion so far has been allocated to that process. But you see, we're not even anywhere midway that process. But 5 billion is gone.
People are sitting and getting allowance.
Exactly. According to the government report, we are likely to save 900 billion shillings annually if the rationalization is done.
But we've already spent 5 billion, and it's not even anywhere. Even the bills which are supposed to kickstart the rationalization haven't even been passed in Parliament. So
They were
The
passed.
last time one
There
was
were- there were
thrown
some
out
which
for
were-
not
there were
having
some
a
which were
certificate
passed.
of
Yes.
financial.
So you see the problem we are having now. So I'm worried for the budget. I'm really worried, especially because of where is the money coming from. I don't know how much targets they are giving URA. I think the last was 29
You're going to
trillion.
be paying taxes.
But no, it's really worrying. It's really worrying
Yes, you are.
for
The tax
us.
on that beautiful hat, tax on that shirt.
No. It shouldn't be. It shouldn't be like that. So for me, it's a worrying situation. It's really a worrying situation unless something really comes up. And of course, there are also some things on the taxes on the land transactions. I think they're also kind of a bit of a confusion because we already have some taxes, capital gains, but now they're introducing a new one on they're calling them non-business assets or something like that. So you're going to have where you enter into a transaction and you're paying about 2 or 3 different taxes on the same
Piece of land.
exactly if you're disposing it of or whatever. So to me it is I cannot be optimistic about it. Yeah, because even the public debt we already at about I think 96 trillion and we are going to go up. I mean, I think the threshold was, I think, about 50%. Right now, we are getting to 60 and what. So, I don't know. I can't be optimistic.
Mr. Bosa, have you been given a target for next financial year?
Yes, we do have a target. We will be required to collect about 31 trillion.
31 trillion.
And that probably will be contributing about 53% of the budget. So you can understand that for a taxman, while, I mean, Perry, David and John will worry about the allocation, we are always worried of how we are going to be able to collect
Exactly.
that target.
What's your strategy?
Usually, we have a clear-cut strategy on how we collect. First, the beauty is that for the last 5 years, we have always grown revenue. Last year, we were fortunate that we hit our target after 5 years. So we hope to continue with that run. So we're also optimistic that this financial year we should be able to hit our target. Some of the things that we have put in place that should be able to help us to get there is automation, first of all. We have very serious, I don't know of a government institution that has automation like the Uganda Revenue Authority. We have things like, if you look at our contact center, it has gone to a level whereby we're even deploying AI. We have, if you look at our web portal today, it has some dynamic features, web filled forms, just to help people to comply quickly. We have a new data center. I think it's either tier 2 or tier 3. We have come up with technologies for the warehouse bonded management system to close leakages in bonds. Strangely, when things go in a bonded warehouse and left there, they can change names, they can change the weight, they change the characteristics, or even just disappear. So we have now ways of closing those leakages. We have, when we have impounded goods or goods are left with us, we used to have a manual auction, and it had a lot of problems, a lot of leakages. We have now come with an online auction just to ease that process, just to close revenue leakages. We have we're revamping our e-tax, and now going to e-tax 2. We have, of course, the electronic physical receipting and invoicing. That is the future of revenue mobilization. IFRIS does not only supervise VAT. With the data we get from IFRIS, we can also be able to look at income tax, pay as you earn. So it's a very powerful tool. We have the digital tracking stamps for the local excise duty. They have also managed to at least guarantee us normal flow. We have the non-intrusive scanners to facilitate trade coming in. So right now we can get goods moving faster. Gone are the days where you have to offload a truck, empty everything, load it back. So today, if you have everything within 30 minutes, you get a container done. If you have some issues, maybe a day or maximum 2. So we even use science today in terms of determining some tax rates. Somebody brings 2-3 shirts like that, we're able to tell the fabric and the HSC code that goes for each shirt based on that. We are also mitigating, of course, revenue leakages. We have a very big stance on fighting issues of integrity and corruption. We have a record for the last 4 years. We have been able to make a mark we have actually had to let go, unfortunately, of over 100 staff on the account of corruption alone. Leave alone people who go for greener pastures, people who retire, that is normal. But on the account of corruption, over 100 people have left in the last 4 years, and that is many more than you will look at the 20-year history of URA. But that's just to make a point. We have come up with systems and policies. We have an entire division of staff compliance, which is the equivalent of the police standards unit, just to look into staff behavior and staff processes and things of the kind. So all those are helping us basically to reduce leakages. Of course, things like rationalizing tax expenditures and repackaging them are things we're looking at to be able to close leakages. And of course also making sure that the technologies like IFRIS are actually doing what they're supposed to do, because there's a lot of money that is left on the table, I will tell you. We are expanding our tax education to make sure it is sector based, because we know many of the pains of taxpayers. If I'm in fisheries, I may have a different tax challenge compared to somebody who's in transport, another person who is in hotel and tourism. So we're also doing so. And of course, expanding the tax base is something that is critical. We think these are going to drive us very far. And basically, there are some interesting interventions that are happening right now that we also think that will make a big push moving to the future. Telecoms have been an issue that is a bit tricky. But now we're undertaking some telecom audits, and some interesting things are happening in that space. So we know that there's some collection in there. We have a new structure for the Uganda Revenue Authority, so which should rationalize and shape us better in the way of delivery. At the end of the day, we have instituted a new performance management system. Today, everybody, starting from the commissioner to the last employee, we sign performance contracts. For senior managements, we are evaluated on our performance contracts on a monthly basis. Thank you very much.
All right.
So these are things basically we know that are going to add value and deliver on we being able to collect more taxes, and not necessarily because of increase in tax rates.
Kenneth reminded gentlemen from URA that the charge of taxes per kilogram is one of the pains traders are having. Why not charge taxes in relation to money value of items, merchandise? I think this is in relation to used clothes. We had complaints there. We have a comment from Tony Kent Chaze, listening in from Mawanda Road in Mulago, who says, Spectrum Extra, concerning the budget, a small number of Ugandans pay taxes which facilitate our budgets. If only URA can devise means to get as many taxes as possible from all entities, small as they might be, we would have a surplus rather than a deficit budget there. Well, gentlemen and lady, we are coming towards the end of this discussion, so let's sum up our discussion. I'll begin by giving your closing remarks. Let me come to you, Mr. Kafuko, very quickly as we come to the end of this show.
Yes, thank you very much to Radio 1 for hosting us today, and thank you very much for the listeners for listening in. I would urge us as the taxpayers, the people on the ground, to keep our leaders in check. Yes, the taxes are choking us, but this is our country. We have to fight to get what is due to us, and also urge our leaders to listen. I mean, at least bear in mind the concerns of us, the normal taxpayers, because we are here, we are here, we are the ones who are in this economy. Yeah, I think I would end it on that note. Thank you.
Mr. Olake.
I think for me, it's critical for us to appreciate where should we tax, and I see that coming through. Definitely one of the two, for me, key areas are those that have an elastic demand, and that is your fuel. But possibly highlight on fuel, the last time I checked, the total increase in the tax of fuel for the past 3 to 4 years was non-existent. This is one of the rates, 100 shillings, for maybe in the past 3 or 4 years. But when you subtract 1,550 from the price of fuel right now, you land at about 3,900 and something. That goes to show you that in the component of price of fuel, there are other elements that are way bigger than tax. So for me, that goes to speak the need for us to quickly pick up our fuel from the ground and do something useful with it. Where known to tax, obviously the basket of goods that is consumed by those in the lowest quintile would be an area.
All right.
But lastly, for me, we need to have institutions empowered. And wherever you've allowed the institution of the Parliament of Uganda to determine its own emoluments, and then you get surprised that they're giving out service awards, I would wonder what exactly you're doing.
All right, Mr. Bosa, your closing remarks as we come to the end of this show.
I think ours on behalf of the Uganda Revenue Authority is a clarion call to our traders that this business of being riotous probably is not helpful for anybody, not for the businesses and not for the economy or even for the government. There are many ways that we have always handled our issues in the past, especially where we are dealing with advocacy and constructive criticism to get things done. Let us get back to the table and hassle out things. Anything that's tax administration, we have always handled.
Right.
Things at the policy level have been escalated and we're waiting for some feedback. So let us stay put and make sure that we can build Uganda together.
Perry, in a few seconds.
I think let's all pay our taxes, but let's also demand for accountability, because the two go hand in hand. They are constitutional duties. Pay your tax, but also demand for accountability and service delivery. I mean, if we see more services as Ugandans, we will pay taxes.
All right, with that we come to the end of Spectrum Extra. Thank you very much for tuning in, and thank you very much, dear panelists, for making time to share your views with Ugandans. Up next, we're going to have great songs and great memories continuing on Radio 1 FM 90. But from me and the entire team here in studio, it's wishing you a good weekend.
Spectrum Extra on Radio 1 FM 90. An extra hour of analysis and discussion of the topical issues of the week. Brought to you by Housing Finance Bank, a financial institution regulated by Bank of Uganda. Housing Finance Bank, we make it easy.
The views expressed on this show are not necessarily those of this radio station or its management.
Don't miss out on the first National Court Open Day on 15th April at Kololo Independence Ground.